G'day folks, welcome back to another update for gold and silver. Now they're both reaching record highs, so they're both booming quite nicely. Before we go any further, make sure you hit that like and subscribe button to support the channel. Also, don't forget to reference the +1 videos where we do a deeper dive into some of the trading strategies. In terms of the outlook, as of today, September 30th, gold is trading near record highs around 3,900 per ounce, up around 40 to 50% year to date, while silver has outpaced its gains with gains of 50 to 60% supported by safe haven demand, ETF inflows and industrial usage. Outlooks remain bullish with gold targeting around 3,900 to 4,200 and silver potentially reaching $40 to $45, though silver is more volatile. Central bank buying, supply constraints and expected rate cuts are key drivers, while geopolitical tensions around Ukraine, Middle East, US and China underpin demand. Risks include dollar strength, hawkish monetary surprises and rebounding global growth easing safe haven flows. So looking at gold first off, on the weekly, the price is well above the moving average, giving us a nice big bull run. Although I do notice we've still got this bearish divergence, a very long-term bearish divergence. It started back in around about April in 2024. Now the CCI has risen slightly at peak, but that's still a bearish divergence versus the price, which is rising higher. So just be aware of that. We expect to see a pullback. I've drawn a target range here. That'll be adjusted up slightly because of that price movement to the upside as well. On the daily, again, we had this resistance up here at 37.91. Since then, it's gone higher. I'm going to keep that there as a potential support level. Again, there's no divergence on the daily. That CCI seems to be tracking in line with the price. So bullish momentum at the moment on the daily. If you're trading on the intraday, we go long according to the daily time frame. On the hourly, what we're trying to look for here is working backwards. You can see there we've already got a potential bearish divergence. Those peaks there on the CCI are dropping slightly lower than that peak there versus the same period on the price. Now that price can still rise. So long as that price rises and that CCI then starts to drop off, we'll consider that a bearish divergence. For this to invalidate, we'd like to see that CCI rise higher than that previous high there. That'll invalidate that bearish divergence. So a bit too early to call yet. This could go a bit higher, but that CCI looks like it's starting to bend down possibly, so we'll just keep an eye on that and see how it goes in the coming days. Other than that, bullish momentum on the price at the moment on the daily. Sorry, this is the hourly. The hourly is bullish as well, and so was the daily back here. Now, if we go to the back test, what I've got here on the daily on the left chart, we started the back test here from that arrow there when the CCI broke above the moving average range, and so did the price. And you can see there the moving average band started to widen, and that was giving us confirmation of a nice bull run, and you would have started going long during that period. So here we've got the 1 hour back test, and you would have taken long trades during that period. Now you could have let this run throughout the whole period. At the very latest, you would have closed it out when you see that CCI on the daily touch that moving average band, and you would have got out at that candle there, on that little red candle there, and that coincided with this period back here. But also notice we did have this long-term hourly bearish divergence, as I've said in the previous chart, and you would have got out once you start seeing that decline on both the price, but also the CCI, and you would have got out. There was no trades made there. There was one little trade there, but you would have got out of there ideally, and that would have been a nice little trade to take. Avoid going long during that downtrend on the hourly, and then start taking long trades again when both the price and the CCI started breaking to the upside. So you can see there that didn't do too badly on the hourly chart, generating about 17,600 in that time range for just over a month of trading. So for silver on the weekly, nice big bull run on the price. You can see there we had drawn a bearish divergence previously. Now that there is actually, if I was to put that there, that's actually slightly higher than that. So that's no longer a divergence between those points, although you could still argue there's a bearish divergence on the wider trend line there. So if I move that to that point there, that could start pulling back from there. So I'll keep that longer term divergence in play. That shorter term period was invalidated. That's why I've moved those lines. But at the moment, that's still a bearish divergence on that longer term play. On the daily, again, it's broken through that resistance we had previously at 44.46. Now I'm going to move that this time. We might be seeing a new resistance up there. I'll move it to that point. Now also notice here, that is broken higher than that previous high. So we're going to delete Actually, what we'll do with this one as well, let me just see. That's a double top at the moment on that longer term play. So if we move that to there, that's about equal. I'll call it a double top on the CCI versus the same period on the price. Move that back to that point. So that's still a bearish divergence. Now, if that goes any higher, we're going to invalidate that long-term divergence. So that's a key area at the moment for silver. We've got this resistance it's hitting, plus we've got this double top here on the CCI, which is showing us a bearish divergence. Now, that's the daily. Now, on the 1 hour chart, look for any micro moves. There was a bearish divergence back here, broke down, just touched and kissed that target range, that 23-38% range. And again, if you're new to the channel, the way we draw that is we take the Fibonacci back to the recent significant low, which would have been that area, and that's at 23-38% range. We have as a minimum target, and it could do anything from it could actually miss it, or in this case, it just kissed it, touched it, and then bounced, or it could actually fall a lot further. In this case, it just touched it and bounced. But that's our minimum target range. Now, since then, what we've had is, notice here as well, we've got a double top, almost a triple top on the price versus a declining CCI. It's going to be a bit hard to read these because they're all masked by those moving averages, and that's masked by that resistance. But there's a bearish divergence there. Now, again, if that pulls back from where it is at the moment, we'll draw a target. Might be a bit early to be premature to draw it now, but I'll do it anyway. Let's pull it back to that significant low. If it starts to pull back, we expect it to hit that 23-38% range as a minimum. Again, I don't trade these. I'll look at it as a potential area to get out of any long trades. So if I'm going long during this period on the hourly, I might consider taking my profits off the table at this point. So if this started breaking below the moving average there, you'll notice the moving average here is also constricting. That's also a negative, I suppose, indicator, if you like. I'd like to see the moving averages expand like they were here, giving us nice big bullish movement. The CCI is already broken to the downside, so that's already in a downfall, and the constriction here on the price moving averages is a bit of a concern if you're going long. So again, I just watch it carefully. If it comes any closer to these, I'd close it out. Otherwise, it could actually go a bit higher if it breaks through that resistance, as I said. So on the back test on the daily here, we've got a price movement on the above the moving averages and a fresh breakout there on the CCI, so you would have gone long there, and that's indicated here on the hourly chart. You would have taken long trades, and based on the daily at the very latest, you would have got out of the trade when it hit that moving average band of the CCI, which was at that point there, which on that candle there, and that means you would have got out somewhere on that range there, and then wait for it to break above on the CCI again on the daily at that point, going long again there. That might have been a small exit there as well. Take your profits. Avoid that decline on the moving averages on the CCI and the price, and you would have avoided that drawdown, and then started going long again there on the upswing of the price and the CCI movement. And from that point, you would have let it go on a daily, and then paying attention to these divergence. There was a bearish divergence there, and you would have got out again once that price broke below the moving averages on the CCI and the price. Then started going long again when it breaks above at that point there. And that's why I've got these moving average bands. I'd like to see them widen, as I said, and avoid trading, or maybe hold off trading once you see a bit of a constriction like it was there. Obviously, don't go long when the moving averages are in a decline like it did in that point there. So this is where I'm talking about maybe taking your profits if it's starting to constrict there. Make sure you hit that like and subscribe button to support the channel, and if you enjoy the content, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across regions of the world's markets. Thanks, and talk to you in our next video.